Welcome to Trading Lounge and the US Indices report. We'll be covering the S&P 500 and also the Dow Jones, mainly the S&P. The S&P weekly chart here, this is the basic count that we're working with in terms of intermediate wave 3 here, a simple A wave, a B wave and a C wave here for wave 4, and then minor wave 1, minor wave 2, which we're working through now. It's a little bit complicated, but we're on track with that, and wave 3, 4 and 5 up to the medium level here, 2.5, so major trading level here. On the daily chart, just to drill in here somewhat, so we're looking at it like this here. So just open this up a little bit here so we've got a bit of understanding about this. So we've got wave 1 here with an A wave here, and then an A and a B and a C wave. We've been looking for 5 waves up into this area through here, so we're looking for this B wave to come in, and then the C wave down here at the 50-60% area is what we're well, that's the textbook target, but we would be looking more so for the 2000 or roughly into this sort of support area through here for this market to move down into. But the nutshell of it is that we're looking for we were looking for 5 waves up here to finish this A, B and C, and we're looking for 5 waves down in this area here. So it's more important to track the 5 waves down into this space here than anything else at this stage. So on the 4-hour chart here, it gets a little bit complicated, but we'll get through it quite simply. Now here we go. So we've got minor wave 1 in this area here, and we're looking for minor wave 2. Now we don't really know where that target's going to be in this case, but normally when we find a market is moving up so high here, it will be reluctant to move down so low here. As I mentioned, the most important point of all of this is to actually count these 5 waves down through here, wherever they may be. And as mentioned, there is a lot of support in this zone here. So this is what we'll be working through. So what we have been working through at the moment is this down here is the A wave, then an A and a B, and then looking for 5 waves up here for the C wave up here. Now it's possible that the C wave is actually completed and those 5 waves moving up here in terms of 1, 2, 3, 4, 5 to this point here, but the confirmation or the evidence that we'd be looking for would be a break of this particular old low here. That would be confirming that it started at that point. So there is a count that I'll explain that can have one more little move up to here. It's probably unlikely, but I don't think, I think that we need a strategy to accommodate all scenarios here. So the short trade would be taking the lows out at this point here. So on the 2-hour chart and just sort of drilling into this last structure here of the A wave to here and the B wave up here, and then 5 waves for the C wave down here. So we've been looking for 5 waves up into this area here, and as mentioned, there's a couple of different ways to count this scenario, but I just think that we just wait for the evidence to unfold here. At first glance, it certainly can be wave A here, a B wave in 3 waves, and then the C wave here is wave 4, and then a move up for wave 5. So I don't want to rule that out as such. And if that's the case, then this is how the count would fit. In this instance would be wave 1 and 2 to here, then 1 and 2, and 3 and 4 and 5 up here. There are different ways to count this, and different Elliott people have different counts, so I'm fully aware of all of that, but as I mentioned, we're looking for direction, and we're looking for trade setups and signals and so on, so that's what we need to be working on. So on the 15-minute chart here, and I think that it might be even better to short the Dow Jones as well, actually, and we'll look at that in one moment. Sorry, I don't need 2 of these here, so remove that. Now, it's possible that we've got 5 waves up into this area through here, or even one more up into this point. I'm looking on the positive side first, okay? So on the upside here, it's possible that we could go into wave 1 here, of 61.8% for wave 2, 3, 4 and 5, something of this nature, and then rolling over from there. Okay, so that's step 1. So any short trade shouldn't be taken unless Well, this is the 61.8% here, so we need to gravitate towards the closest largest number, which would be this area here. So if this 2090 here became the retested resistance couldn't get back up through there, and you had your low in there as your reference point, then that would be the short trade entrance there. Now, it's possible to just short it from up in here too. Now, if you do that, that's fine too, but there is risk in that, and you would need to have a much smaller position size in here, which is fine, but yeah, and then you'd be looking for the first little 5 waves to the downside, and then the retracement level back up, and then you can short higher up into these zones here as well. But they all should be small trades, and an easier, simpler way to do this without any stress is to use the price points down the side here and work out, because as you're shorting a trade, you don't want to make it top heavy, so sort of a pyramid upside down, because then the stress on the trade gets too large. So you need to space them out, and spacing them out in a Fibonacci relationship gives a very nice, the space between like 1, 2, 3, 5, 8, spacing them out like that enables you to build up enough profit without making, keeping a balanced trade rather than making it top heavy. Now let's just look at the DJ while we're here as well. And I'm just going to cut through to that on a 15-minute chart here. The reason for that is that we always had a better, we had a B wave already in top in this instance here, and we had a nice 5-wave structure already down here, as you know, and we were looking for an A and a B and a C wave here, pulling back up to the 61.8%, which moved higher by the by, which was about here by looking at this. And then looking at this as wave 1 to the downside and wave 2 to this point here. Now, in this instance too, the 61.8% mark from this wave 2 high and wave 1 here comes in at the 17.75 here. So you would want that area there as a retested resistance before you short it. That would be the safest bet. Now, if you're seeing it being bearish and you want to make a sort of move on it, well then the 17,800 as a retested resistance here would be the first place that you wait for. The breakout's important. The retest is more important. You have your reference point at that point, and then you can move through like that. So adding a small position here, which can turn into a loss because it's just higher risk. It's not a clear structure at that point. But down here at the 61.8%, you'd be on your way at that point. So you can build in through this area through here, especially if you're watching it. You can put some skin in the game. Alrighty, that's it. Thanks for tuning in. Cheers.